Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Hold on. Whoa. I wasn't quite ready for it to end. I think I have everything else in order here, and that's good. We're a little early because we got some big stuff coming down at the bottom of the hour, and just a lot. Oh my gosh, so much is happening in this market right now. It has been a very, very busy summer. I mean, the liquidity has kind of left and declined a little bit, but it's been an unusually busy and liquid summer. Yep, and Lucas is right. That's the first big thing on my mind here, is that at the bottom of the hour we have the quarterly refunding announcement. So let's come in and look at the charts. Big news overnight was that Fitch downgraded the U.S. credit rating. Here you look at the treasuries, like zero reaction to it. Okay, in fact, we've come back a little bit, and now here it looks like ADP was good, and we are pushing down once again. When you look at the S&P 500, though, there was like a huge gap on the announcement, and it looks like the people in London sold it. Let me tell you something. They downgrade the U.S. credit rating. Equity market sells off, and the Treasury market doesn't care. I'd trust the Treasury market on this one, right? So I say that's a buy the dip, but don't quote me on that. All right. Oil still continues its slow march higher. Looks like this is being fueled by some short covering too from some of the reports that I'm getting. Then we get over into gold and silver. Kind of look like they're under pressure. Hey, you know what? That is not the music that it's supposed to be playing. There we go. I was like, that is above and beyond. I'm not. Hopefully I don't get a strike for that. Oh well. Anyways, then we come over to the Bitcoins. So the Bitcoins was pressured yesterday, and it looks like somebody is buying again. I'm almost willing to bet you. Almost. I bet you that's Michael Saylor. You know, 10 times doubling down again. Okay, and here we got the dollar continues to be strong. So let's come back over here and look at some of the numbers. Yeah, group therapy is good stuff. You know what happened yesterday was, like, I was in the garage working, and I'm listening to like Oliver Heldens and Don Diablo, and all of a sudden everything that they're playing is almost like hard style. Like people have switched from like tech house to like the stuff is like over 130. Like, what the heck? What happened to my house music? And not that I'm against that kind of music, but it's just not appropriate for all situations. And I was listening to those guys for some good feel good house music, and like, so I had to change it. But then the thing that drives me nuts the most is that Above and Beyond, for their group therapy podcast, they took it off of the iTunes podcast directory because they don't make, everybody listens to it that way, and they don't make money when you listen to it on the podcast directory. So they switched to, you have to watch it on YouTube or on Spotify where they get money for people listening to it, right? Which just makes it a lot harder to keep track of it and listen. I used to listen to like literally every episode, and now, but a lot of that also has to do with not being in my car as much because work from home now after the pandemic. Okay, anyways. So ADP employment, oh my gosh. Okay, so I saw the reaction to that and then see the number. US ADP employment change 324,000 versus 190,000. But wasn't it like a crazy outlier last time around too? Let's come back and look at that. Okay, last time around, I'll bring it over here. Yes, last time around the estimate was 170 and they got 324. Okay, here's the refunding announcement. Okay. So I didn't see a significant reaction to that, believe it or not. If anything, they're kind of leaning on the upside. Is it large? Well, so for this one, it's hard because there's like, there's numbers for all of these things and I don't have estimates or anything. Obviously, they're increasing it for pretty much across the board, but I don't know how much that was compared to like what the market was expecting or anything. This is an interesting one because it is a very important piece of news that comes out, especially in this current situation, but it's like almost never listed on your news calendars or any of that, right? Well, so I'm not quite sure what to make of that. Oh my gosh, they rebranded TweetDeck to X Pro. Okay. I muted myself so I could pass gas and forgot to turn back on. Okay, so the U.S. Treasury plans to increase 3-year note auction by $2 billion per month, 7-year note auction by $1 billion per month over the next 3 months. Plans to increase 10-year note new issues and reopenings by $3 billion. Like this is a lot. U.S. Treasury expects to make incremental increases to TIPS auction sizes, starting with $1 billion increase to 5-year issue in October. Treasury has made significant progress on buyback plans. Well, you don't. So the way that it works is every month, right? They do an auction, and when you go and you look at the auction announcement, it says how much is being auctioned off, and what they're saying is this is how much it's going to be. Now the thing is that the market anticipated that they were going to be issuing more, right? A little suspicious to me that it's not. There was not much of an initial reaction to it. But maybe this is one of those ones where the robots and the algos and stuff can't trade it immediately. And so you've got the guys at the big desks are kind of like analyzing it and have time to decide what to do. I don't know. So just thinking ahead here, tomorrow we've got services PMI. That's a big piece of news. But I think that we've got most of the stuff behind us, so the market can just trade. It looks like it's not going to be just an easy call like I thought it might be. I thought we were going to come in here and it was going to be like, oh, that's so bad, and they were just going to sell and sell and sell. Well, it looks like it's going now. I was kind of eyeing O2 and it doesn't look like that's an option anymore. And I was even kind of questioning O2 half. I saw O2 half and I was like, well, can I hit O2 half? Oh my gosh. Okay, well, they hit back right there, so... Yeah, and then, the funny thing is all the stuff that we've talked about, we haven't even gotten into what is probably the top headline, at least, like the one that's generating the most clicks, which is that Donald Trump has been indicted again. Something goes wrong with Amazon and Apple tomorrow? For what the cap? Yeah, well, so basically their argument was that Donald Trump said a bunch of false things, saying that the election was stolen, even though he knew that wasn't true. I think the whole case is like incredibly suspicious. Like not suspicious is the wrong word. It's so political, right? Jeez. I thought we were gonna get a pause because it did tick back. Iceberg 27.5. Iceberg 28. So what happened there is the 30-year just got crushed. That's why our micro was moving so much. Yeah, anyways, like in the documents, it goes into like, well, Donald Trump has the right to express his opinion, but he was told that this wasn't true. So I think that the whole thing is kind of dubious. I don't think... I haven't seen any analysis by experts, but my gut reading of it was that this case is not going to go anywhere. But like it's like the third or fourth one. Like they really are going all out crazy. Like I think that if he did not run, they wouldn't be doing these lawsuits. Is what I think. And not only that, but like this is all stuff that happened like 2.5 years ago. Why didn't they do it 2.5 years ago? And Donald Trump himself pointed this out. It's like, well, they waited till he was running for office so that they could use it as a political weapon. Right? It's 100% political, which is just, I believe, so damaging to the country. So, you know, everybody is pretty uppity about that this morning. Okay, Live Monitor says 338 billion in issuance high, but not a disaster. See, the way that fell was pretty dramatic and makes me want to get in, but I kind of feel like I have to pause. There wasn't like a strong reaction on it in the beginning. They kind of were, you know, this last move was a little crazy. I don't know. Oh, maybe it's going to go without me. Wow. These ones are kind of hard to watch, right? Well, we're like, what, negative 13,000 since the ADP? That's a lot, too, for so early. Yeah, well, the dollar is definitely rising here. That's kind of one of the things is that you could definitely get this continuing to go because of the dollar, right? Too bad I didn't get O2. That would make this really easy, right? I'd say a pretty decent amount traded there at 27.5 and 28. So this, it's not all short. Like there were buyers in there. So that makes it a tough call as to whether they continue on from here or not. I'm not really sure. Because the issue that I'm seeing here is like I was coming in anticipating that we could get some more selling today. But it came in really fast and I missed it, you know. So is it done yet? After 15,000 contracts, I just can't say. I just can't say. So I think I have to sit on the side. And you know, I might be able to justify, especially if it came back up here to like 30, to try and catch it. But otherwise, I may just have to watch this leave the station without me. I'm feeling a lot sharper than I was yesterday, though. It does kind of also look like the dollar could turn around here. Like the dollar is moderating and the dollar is what's moving us. And the Japanese yen. I would say probably more so the Japanese yen than the euro. Gold is getting hammered pretty hard here too. $285 can't hold the bid. Yeah, well, they come back down to those lows really easily, right? But look at the dollar over here, right? It's just moving on the dollar. Will the US 30 make a new high? A new high in yield or a new high in... Well, I tell you what, the 30 year is the side of the curve to be on today, right? They got, like, after that refunding announcement, the 30 year just got demolished. You come and look at these charts over here, right? You see, look at how far the 10 year moved compared to the 30 year. Here, let me zoom in on the 30 a little bit. Right? Like when that refunding announcement came through, the 30 year just like dropped from what? From 30 to 24, just dropped 6 ticks, like boom. I'm still getting tweets from. Okay, is this a one? It looks like it. This is just a summary. The U.S. Treasury plans to increase 20, 30-year auctions by $1 billion and $2 billion, respectively. Treasury expects to make incremental increases to TIPS auction sizes, starting with $1 billion increase to 5-year issue in October. Treasury has made significant progress on plans to implement a regular buyback program in 2024. Looks like Donald Trump tweeting again this morning. Joseph Wang here. The latest Treasury supply estimates from public and private sector analysis. Bill issuance is heavy the next few months. So the Treasury will soon be at their 20% recommended level, then trillions in coupons each year forever. In my opinion, I can't see anything but structurally higher yields. Oh, will we make a new high in the Dow Jones? I think maybe yes. Well, you know, I don't watch the Dow so much, but like when we come back to ES, you know, and the whole question is, will they get above 5,000 this year? Well, I'm not 100% sure about this year, but I think it is a really good chance that we do. It's only a hop and a skip away. This market has been going crazy. The things that appear to be driving this rally, while they are somewhat temporary in nature, I say they're temporary in nature like a year or two. So yeah, there's plenty of time and room for them to make new highs. I wouldn't want to be short this market, right? I wouldn't want to be short this market, but I would have some contingencies to you know, have some money set aside for if this falls apart. Because if it does fall apart, it could do so extremely quickly. Okay, so I was right to be careful there. You see, though, that they came back really quite hard in the 10-year. In fact, in the 5-year, they're almost completely retraced it. But the 30-year did not. So again, we're getting some pretty excessive steepening, which it concerns me a little bit. Steepening in and of itself isn't so much bad, but that tends to happen when we're going into a recession, right? So I've never seen I've only been doing this since 2008, so it's not like I'm a super old hat, but in the times that I've been watching the market, I've never seen a market that was so confusing. Because I see things in this market that suggest that the economy is really strong and everything's going well. And then I see a lot of things that suggest that like recession is knocking on the door. But that 30-year isn't really giving you much reprieve. And Joseph Wang is right. Like, what we should see is structurally higher yields. So if we're going to see structurally higher yields, then that means that yields on the 30-year are going to kind of catch up. So actually, that kind of ends up being part of the problem. Is the yield curve steepening because they believe there's going to be a recession, that sort of a thing? Or is the yield curve steepening because they now are starting to believe in structurally higher yields for a longer time? Well, I think it's probably the latter, but you can't rule out the former, right? So this issuance means, yeah, you sell the 30-year, yields get higher, right? Because yesterday, the 10 and the 30 were really close to in line with each other. And now the 30 is about 5 basis points higher. So if you had taken the steepener, you'd made $50, right? I don't know. The steepener trade is like a really hard trade to do, but maybe now is a good time to take that trade on the longer end of the curve. Okay, the 30 years is kind of clawing back a little bit more here now. Wow, Ukraine's deputy prime minister says that Russian drone attack damages 40,000 tons of grains planned for countries in Africa, China, and Israel. I don't think that 40,000 tons is that much, though, is it? I am seeing a bit of a spike in wheat, though. When I'm looking at this market, I'm a little unsure at this point what the flows are going to be from here. Especially if the treasuries get above that open, then I'm really going to be like, I'm not quite sure what to do here. So I think I'm going to be wary of taking a trade. But it sure looks like the market has plenty of surprises left for us today. The exact opposite will happen? Confusing market. Good time to be in a market to be like an informed trader, but also very difficult to be the informed trader right now as well. It's just difficult trading all around, I think. Kind of reminds me like So this morning I saw a Reddit thread that was like, hey, I am a profitable trader, ask me anything. And then you go into it and they've been profitable for 1.5 years, right? So you know exactly what I'm going to say, right? You need 5 years minimum. And yeah, and quite honestly, even if you have 5 years minimum, I would not rely on using yourself and your success as an authority to prove your arguments. I think that if something that you're saying is true, that you should be able to prove it empirically, which is that you should be able to show the market data and show that a certain behavior works, right? Like I can come in and I can say, you want to jump on the trend early because large meta orders follow a square root law, which means that the larger the meta order is, the impact starts to decline, and that kind of puts an upper limit on things. And so it's much better to be early in when the impact is still almost linear, right? And there are countless studies that I can point to show you that this square root law behavior exists. I think the best one is a million meta order analysis in Bitcoin. Is a really good one to go and look at, where they prove that this law it happens even in cryptocurrency markets, which is really strong evidence that this behavior is caused by the order book and not something else, right? I can prove it empirically. But everybody wants to say, well, I've made money, so everything that I say is law. Right? Don't follow that, because what happens is people will have success for a year or two, get, the ego, go and tell everybody things, and then go and blow out, and then you don't hear when they blew out. And the thing is the number of guys that like they'll have a success for 1 or 2 years, but they don't make it to the 5-year mark. There's like 10 to 100 times more of those guys than there are guys that make it actually to 5 years and are still around, right? So all of the advice that you're getting from these people are from people that aren't actually going to survive in the long run, right? That's why you need 5 years, because that's just the amount of time that it takes to filter out all of the fat tails and the people that are getting lucky, Well, I saw that one thread, but that's the first one I've seen in a while, right? The number of retail traders out there bragging about how well they're doing is actually less. You would think that there would be tons of retail traders like it would be getting crazy and stuff, but it actually hasn't. It's been quieter on that front. It seems like the day traders have kind of struggled a little bit and haven't taken full advantage of this rally, which would mirror what the hedge funds has happened with the hedge funds too, by the way, is that the hedge funds are just getting crushed because they're making money on their long trades, but they're losing so much on their short trades that it's like it's pushing their position limits and all this stuff. So again, a very interesting and confusing market. Well, the pullback was really good. It's already heading back down. It's a little early for me. I'm also not sure I really like 30. I think I did have a chance to take 0.25. And what about the 30? Yeah, the 30 year is just slipping back super fast. Yeah, Democratic leaders Schumer's and Jeffries say the third indictment for the former President Trump is the most serious and consequential. I don't think so. You know what? It's probably not benefit you guys to talk about Donald Trump's indictment too much today, because like there's going to be so much expert analysis about it over the next 3 days. You know, go watch Dershowitz on it or some, you know, those kinds of guys like lawyers. They'll be having a field day talking about it today. But when I saw it, because, you know, the whole thing was that they were saying like there's conspiracy charges and all this, and I'm like, oh, this is going to be a good indictment. Let's see what happens when it actually comes out. And then it comes out and I read it and I'm like, okay. This sounds like this is just like a terrible indictment. They got nothing. There is a pretty decent amount of level 2 activity out here. What's Brannigan say here? On Friday, everyone was outright bearish because U.S. equities posted an outside day. U.S. markets rallied all day. Today, everyone is bearish because Fitch downgraded U.S. rating in line with SP. If VIX offers high risk bids hard because traders short and hoping. Hope is not a strategy. Yeah, he's right. He's right. This whole thing over in the E-mini kind of looks like just a perfect setup for another short squeeze. Although the thing out there, the thing that I think could stop this rally and just flip things on its head is if the interest rates get too high, right? Bren Greenwald, how many total criminal charges and separate indictments do the Biden Department of Justice and various local Dem prosecutors need to bring against Trump before he falls a little bit behind Biden in the polls? Are 163 counts enough? 7 separate indictments? We'll find out. Or, given rampant and well-deserved distrust in American institutions of authority, from the media to U.S. security state to the Department of Justice, will more indictments boost his numbers? At least half the country holds the leading elite institutions in complete contempt as the story. Oil and gas keeping some pressure on inflation? That's a good point. Like, I'm seeing a lot of things here. Well, so one of the issues that I'm having right now is that it's not just inflation. Like, I can see a scenario where inflation comes back, and that's a concern, right? But I'm also seeing a bunch of other things putting pressure on interest rates right now, right? The moves that are happening in Japan, that's putting a pressure on interest rates. The Treasury issuance, the amount of debt that we've taken on during the Biden administration is really putting some pressure on the Treasury market, right? So we're kind of in a situation where if inflation does come back, it could be really destructive, right? And that oil has just kind of been pushing. So I don't know. If I had taken the long at 03, how would I be feeling about this right now? I think I would be a little bit sanguine because the cumulative delta on this hasn't been too much. It still looks like it's the dollar pushing us. And I have no clue how far the dollar goes here on this. Man, I mean, that's a decent amount that traded there at 27 for the lows. That, like... So I think that I could probably, if I was gonna try and mess with this one, I could maybe put a stop limit right here. Okay. So the thing is that this push further in is a little bit too soon. It is running into some liquidity, and that says, on one hand, structurally, it's kind of going to be a little difficult how far they can get. There's a really good chance that they kind of come down and bounce back up into the 28 area. But it also means that the people out there that are selling really, really want to sell, right? So it's just a matter of how many orders do they actually have to sell? Beats me. Then the other side of that is that if it's the dollar that's moving us, right, then they're just going to keep going. Because I've already missed another $10, looks like. Back to that new low, it looks pretty impressive. Although, where does it come? So I need to come back onto my volume profile here. Ah, yes. Oh, they are. 25.5 was that level from yesterday that we were looking at that they never breached. Below that, the next area is all the way down at like 110.13. Which actually isn't that far away. If we were going to have a trend day, they could do that. I'm not seeing anything too unusual in the book. Take the quick profit on that. On that simulator scalp. I feel like I should tweet something. Notice how interest rates are pushing highs again, despite current inflation indications being low. Growth based on debt has consequences. Imagine how bad it will be if inflation comes back. Dot, dot, dot. I kind of thought maybe they were done. They pushed back down to 25 again. There's another iceberg there. So, yeah, in this situation, I don't think I'm the one that's going to be hitting into it. Although if they breach through that, I could definitely try doing it again. Going to be interested to see how much it takes to go bid here at 25.5 if they do it. It's a pretty big iceberg there at 25, it looks like. Well, it went off for 25 and it's holding there pretty solid. 57.26 contracts to do it. We are now at negative 22,000. Cumulative delta. So another 5,000 difference, and the dollar continues to just keep pushing in strength. So I think it's kind of funny, like Fitch downgrades the U.S. credit rating and the dollar strengthens. Okay. Yeah, they took that one. It doesn't look like that I'm going to get a fill on that, so. Ooh, that was a stop run. Somebody puked that one. I wonder how much of that puke was the people absorbing at 25. Because that comes out almost equal in volume there. That's actually, I mean, let's watch it. I don't think that I would want to be going long in this market. Well, I could do it on a sim account, I guess. But that's the kind of behavior that can create a temporary reversal. Let's do it right here. Okay. I don't know though. I think that I might be able to get a temporary reversal here.
the pressure's a little bit, it's not really coming up, so I'm going to bring my target in here. And I'm going to puke this really quickly if it doesn't go right. So we've had this push below 25. So one might think, okay, like they run into the liquidity and that could be the sort of thing that reverses it. I don't think that I would be looking for that situation. I'm only looking for like the liquidity hole to have formed at 23.5. Hey Jay, I haven't seen you in a moment. How are you doing? Like the last place that I had been looking at, you know, that I had seriously considered, but it was 03, you know, so I'm just looking at my benchmark places. I could have been up 30. That is quite a stunning move, really. That they got crushed. Like, this is actually, so, you know, I saw a number of notes from on Zero Hedge about this yesterday. One, they kind of showed at the close, like, why did the Treasury sell so early and this and that, right? And then there was like a note from Goldman about it, because they said that the biggest question on the desk was, why were the Treasuries selling? And it was I felt really good, because their analysis, although much more in depth, kind of mentioned the same things that we were talking about here on the stream. That it was like, there was like the end of month stuff was kind of bidding them up, and then without that, you know, it was just sell. And so now you kind of got to be like, well, they're doing the same thing today. Like, today has been more extreme than yesterday, and they considered yesterday like like that selling was unusual and people were asking questions about it, right? I have definitely seen moves in the Treasury market that looked more spectacular. So that's what I find curious about it, is that the decline was not that, it wasn't that spectacular. Wasn't that spectacular, but the market is definitely taking note of it. Yeah. Wondering, I might have been able to have pulled 2 ticks out of that. Yeah. Looks like I think, what did I originally have it at? 25? Where did I adjust it to? Yeah, it was 24.5. So the original one would have worked. Okay, so they come back to 25. So I can kind of see the shift in the book. And you see these bids are kind of forming up there at 25. So, like, I think that a bunch of traders just switched. So now we kind of get into the place which is like, okay, do they really have more to sell? Because I can totally see them going even further today. Like, they reached the critical levels. So and given the situation and everything, they could totally have a trend day today. It's not like the last time I said they could totally have a trend day, I felt pretty confident it was going to be a trend day. Right now, I'm kind of like, it could be 50-50 if it's a trend day. But the fact that the trend day possibility is there kind of tells you something, right?
I don't know. As I'm saying that, I kind of almost feel like so number one, like everything that I said is true there, and I have reasons to back that stuff up and everything, but at the same time I kind of feel like I'm being a little bit too confident as I'm saying that. You know? I find this market a little bit difficult. You know? I just sat and missed quite a bit of opportunity there. Why oh, well, when I was talking about levels, I'm just kind of saying like right here, right? So it's kind of one of the ways that a lot of people will try and look at this is like, okay, here's lows. You breach through those lows, then you can run. So the way this tends to behave, is just like box theory. You get a move like this, right? Boom. And you can kind of position yourself to, you know, the higher end of this and then get it when it breaks out from the box, right? So if we come below that level, then there's kind of this thing that's like, okay, is it going to extend? Or was that just a dive for the liquidity and it's over? Right? Because there was a decent, I mean, you can see it in the profile, right? Like look at the profile here. Right? There was liquidity there. Obviously not nearly as much as there was like down at the lows over here yesterday. That's another thing, is yesterday they sold and then it just kind of sat there the whole time. Okay. So like the selling in the treasuries really is quite extreme right now. You would never know it just from watching the tape, I don't think. I'm watching the tape, it just looks like a regular down move to me. All right. It was like 5 basis points from the open though. That is a big move. Anyways. So, you know, there's going to be a lot of liquidity down here. And then the question is, does that liquidity overwhelm the sellers? And, you know, they stop and then it kind of reverses back on them. Or is there enough selling out there that it just keeps plowing through? Because, you know, in this situation, there totally could be somebody out there with hundreds of thousands of contracts net to sell that could cause the treasuries to just sell all day. And I don't really know. I mean, it's a little bit, the thing is that so the big piece of information that we have to work with today is that was the Treasury refunding announcement. And there wasn't a strong initial reaction to that. I guess the other one that we got was ADP. Although, remember that last month ADP was really good. And then we were really concerned about non-farms being too good. And then non-farms was like just right. Yeah. So we'll see what it does this week. See what it does on Friday. But those are the kind of like the two major things that we have to driver flows. And so given that, absolutely, we would be biased to the short side, but it was like a question of how much. And like when we first had opportunities, it was already like net 15,000 contracts done. And now we've done another 10,000 contracts net down lower, right? So it's like in a situation where it's like, well, I want to be short biased, but I kind of think I missed the trade, basically. Profiles finished at the low. Well, I mean, I don't know. They're trading 10s and 14s, so it's not like the book is just completely pulling. Yesterday it did hold for a couple of hours. I thought it would just keep falling. Oh yeah. Well, like the thing that was weird about yesterday was that like they came down to the lows and just sat there for a long time. Here's Ben Shapiro woke up. Jack Smith's indictment is essentially an op-ed on why Trump incited a riot on January 6th without any evidence of incitement sufficient to support such a charge. So he charged a bunch of other spurious stuff too. I'm probably a little bit too much in the conservative bubble on that one because well, let's come over to Reddit. I don't remember reading Reddit threads about this and people being like, oh, these are like really solid charges that are really going to hold up in court or anything like that, right? What's the top comments on the r/politics thread? A quote from Mike Pence. Nah. Yeah, this is a good point here. Is that like one of the things with this case is that the judge that has been assigned to it is like the worst one, the least favorable one for Donald Trump. Hmm. Okay, so we are in the pullback. The 5-year definitely pulled back. Actually, the 30-year... Oh, that's interesting. The 30-year is at highs in cumulative delta. Do you see that? The 30-year is at its highs in cumulative delta. Despite moving the most. So that has me a little spooked. I definitely do not understand what's going on here. I mean, I thought I did. I thought that I did, and it was like I was just late, so I have to just kind of watch it go. But now it seems to me like there is something going on in the yield curve here that I do not understand. I mean, I definitely see like the yield curve steepening here and stuff. Kind of retracing some of the flattening that happened overnight a little bit, but the way that the volume is playing out in between the different instruments doesn't really make much sense to me. Only the 10-year makes sense. What impact do you expect the Fitch rating downgrade? So if you come in and you look at the overnight action, okay, that downgrade happened during the 1 hour that the market is closed. Okay. So right, if I can show you here on a chart, right here is where it happened, right? So based on that news, I would expect to see Treasuries sell as demand for, credit downgrade means less people can buy that particular debt, and people will ask for a higher yield because of the weakened credit rating. Okay. But that's not what happened, right? Treasuries sold up, interest rates moved down, right? And in all honesty, it may have been a nothing burger because the movement that we saw on the open wasn't all that crazy, right? Then you come over to the S&P 500. The S&P 500 gapped down almost 15 points, if not 25 points, right? Before then later when the European markets opened, selling lower, okay? So in other words, the equity market reacted very strongly to the downgrade, and the Treasury market hardly reacted at all, which makes zero sense, right? Because if any market is affected directly by a credit downgrading, it's the securities that actually got downgraded, right? Equity markets reacting really strongly. The securities that actually got downgraded don't care. So what does that tell you? Yeah, I think you buy the dip. I think I've seen this play out before, right? Because I remember when we got downgraded before, and it ended up being a nothing burger. So, maybe it has an impact from a political perspective, right? Because I think one of the arguments I've seen politically has been, well, yeah, we have a lot of debt, but look at how much debt we took on under Trump, right? Well, yes, Trump did take on a lot of debt, but here's the thing. Number one, don't tell me that you think that Joe Biden would have taken out less debt if he had been president at the time. And number two is that now that you're not in the emergency situation, you're still taking on a lot of debt, right? So much so that it is affecting the credit rating now. Yes. I think that in the longer run, it could have political implications. Means that the market is very informationally inefficient. That's exactly it. Because all of the itchy finger day traders are all over there trading ES and not the treasuries, right? And so over in the treasuries, nobody's really looking at it. Nobody really cares. Well, decent amount of volume is traded at 26 now. So, what we had here was a solid hour. Let's call it 45 minutes. And an hour to 45 minutes of just sell. Not like meta order, you back off sort of thing. They just kept going. So, well, I'll look at that. There's another 2 ticks down. So I think that one could still possibly justify going short. The question is just what is a good price to do it at? 05 was probably the best opportunity you would have gotten so far. Well, you'd be up $5. I don't know. Don't know if that one's worth it. No one looks at the Treasury because they cannot trade it? Well, why would you say that? I mean, the Treasury is the easiest one to trade in, my most accessible one. It just doesn't give the day traders the thrills that they want, right? Like when you look at an instrument for, okay, what are things that make an instrument attractive to trade, right? Okay, so then an instrument is attractive. Where does the most of the volume go to? It goes to the Treasury, guys. The Treasury is the star, man. That's where the most liquidity is at. And it's not just the sizes of the instrument and stuff. There is tons of activity for it. It's just the retail traders that don't get it, right? All the professionals are over here looking at the treasuries, and the retail traders can't get, oh, NASDAQ, click, 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 click. Isn't the commission to tick ratio? Oh yeah, the commission to tick ratio in the 30-year is insane. Man, okay. Who thinks this is gonna go lower? Should we do a poll here? Oh, I don't know how we could do a good poll. Which price gets hit first? 28? Well, we got to make it equal. Okay, so like if we're at 25 right now. Start a poll. Which price touches first? Oh, I have to say 28. 110, 28. Which from right here is 1, 2, 3, 4, 5, 6. So then we have to go 6 the other way. 1, 2, 3, 4, 5, 6, 22. Do you think that they'll make a new high for a new swing high or a new daily low first? Oil fallen pretty hard here. Yeah, they've fallen about $1. Well, after 4 votes, you guys are equal. At the moment, it looks like the 28 is winning, though. Somebody in this thread, this whole thing on Reddit is kind of funny. So I made so somebody said, I'm a consistently profitable day trader. Ask me anything. From the last 1.5 years, I am a consistently profitable day trader. So I said, people really shouldn't call themselves profitable unless they can show a 5-year track record. The industry standard is 5 years, as that's what it takes to see fat tails and filter out the lucky. Right? So I've gotten like a bunch of downvotes and actually a couple of upvotes now. I'm positive now. But so one guy says, I'm laughing. This is getting downvoted. 2 profitable years don't make you a successful trader. Okay. And then this other guy says, only need to get lucky once. Well, if you get lucky once and then subsequently blow it all with further trading, it doesn't really matter that you got lucky once. Read that. If you get lucky once and then subsequently blow it all. Oh. I had to say with more trading. If you get lucky once and then subsequently blow it all with more trading, it doesn't really matter that you got lucky once. Well, I tell you what, they did trade the 28, but it came back really quick. Yeah, really quick. It touched it and then almost immediately fell. Yeah. Lucas says, are you asking me I didn't take any micro trades today? No. I got stuck in that. I don't know how much further it's going to go, frozen, and just kind of watched it move like what? So when this started at 02, I was kind of like, I want 02. Like I was sitting there and it kind of came up to 02.5 and I said, okay, like if it does look like it's kind of starting to shift here. So if it comes back to 02, I might try a testing trade, right? Because when I originally looked at it, it was like, well, there was no reaction to this or anything. So I'm not sure if there's a trade actually here. So I wanted to give it a little bit of time. Then when it was started to get to 03, there was like a brief moment where I was like, do I really want to hit into the highs, sort of a thing, right? But you know, I didn't have very much time to think of that one because before I knew it, we were like at 04 and 05. Like it was fast, right? So pretty much the whole time I was just like, you know, I found reasons to not take it because I felt like it had already gone really far and I wasn't sure if that was a very good place to position myself. So no, I didn't take any trades. I was late. I was late on the trade. But that said, some of the places that I've tried messing around in sim and stuff, I don't think that they were the greatest spots either. And I'm extremely suspicious of the way this is working right now. The spread on those? I mean, right now it's 1 tick. It's fine. Usually I'm fine. On that day when they were switching, it was bad, but you know. Well, it's sorry. You want to call it 2 ticks? I meant like there's one price between the two that doesn't have liquidity set on it. And I would say that that's actually unusual. Usually it is just one tick. But there is definitely a lot of it moves and no volume traded there. That definitely happens, yes. Although, in my opinion, that's actually an opportunity more than anything. That means that there were prices where you probably could have caught the edge. You know, like when we come back to like this 03. Well, like 041, nothing traded there, right? That was an opportunity to catch the edge, possibly. Who down? It was Fitch, which is one of the 3 credit rating agencies. But it was like the smaller of the ones. I don't know about that. You know, when I say catching the edge, that just means that you can hit into a price and immediately have it be, you know, immediately have a possible one tick, you know. Like you're hitting into 05 just as the offer gets cleared. That's all that means. Catching the edge. But like that's the thing, is that the micro yield futures are not that competitive right now. And so I do think that a good deal of the success that I've had in trading these is because of the micro yield futures in and of themselves. That there are very many of my best trades are ones where I hit into it with a market order and then I just catch this crazy runner. And over here in the treasuries, I'm not able to catch that because everybody beats me to it. Over here, I just end up sitting there with a limit order. Whereas over here, I get it. Like it gives me the order. No, I don't think that the downgrade is very important. Yeah, so again, a couple of things we're talking about here. The equity market responded really strongly to it, but the treasury market did not. Okay. The treasury market is the securities that got downgraded. So can you believe that? The US equity market plunged on the news, but the securities that actually got downgraded didn't really care. At least not until maybe now this morning where we've sold, right? And that might have had more to do with the issuance and everything else that's going on. So last time around that this happened, it was a nothing burger. And I think that's probably what this is too. Like if you're selling the S&P 500 this morning because of the ratings downgrade, I would rethink that one. The 26 can be like, there's definitely like a hole here between 25 and 26 now. There's a lot of volatility in the treasury still, but anyways, yeah, if you sold the open. Well, that was the thing is I in Discord, I was like, oh, okay, here the thing came. Let's see what they did. I expected that the treasuries would sell on it. They didn't. In fact, if anything, they bought on the cuttings rating downgrade. Right? So. Yeah, no, I understood what you meant. Yeah, it was 15 to 25 points. But that's what I was saying. Like my theory is that you've got a lot of knee-jerk traders out there that, you know, they hear the headline and they just gut reaction to it, sort of a thing, and they're all over in the S&P 500 and not in the treasuries. Like they don't care about the treasuries, and that's why the treasuries don't react to it, because the people that actually know what's going on and are actually doing the business with treasuries know that it doesn't really matter. The people that own U.S. Treasuries own them for for more reasons than just that they're AA plus, basically. The ratings downgrade doesn't change the importance of them to their business because they do business in the United States and that's what's available to them. The more Treasury issuance, on the other hand, that's a big deal, right? Yeah, I'm surprised. It is. It has been better than most summers, hasn't it? Now there is a liquidity hole here, and it is probably not healed until the top of the hour. So we're getting close. But two things. Number one, there's a lot of volatility because of this anyways. So if I'm a market maker, right, and I go in and I take inventory on at 27, am I just going to take it off at 27.5? Well, in a market that just fell as hard as it did, you might want to get a little bit more than one tick out of it, right? So they're going to hold their spreads a little bit wider. And that's why you can get, like, there's this liquidity hole, but they can trade across a larger range. So it seems to me like they can move fairly well all the way between 28 and 24. Right? But I don't think the liquidity hole is completely healed. And then there's this other thing, which is just like that the flows could be so strong that it may just not matter, right? Like, under normal circumstances, a trend wouldn't have been able to persist for that long. So there was some people really desperate to make moves. But the way this is going, so like, first of all, look at the dollar, right? So the dollar continued to strengthen, made new highs. Treasury did not. Okay. Treasury has bounced back and forth here now. 1, 2, this is the third time. Each time, by the way, when they get up there, it kind of falls back down really quickly, right? So I'm a little suspicious of this action. Like, some of this, and the cumulative delta has been mostly flat through this as well. Okay, that's the other thing. Okay, although I can't sort out what's going on in the 30 and the 5, only in the 10. So I kind of feel like that this is a little bit of, like, random movement to try and entice people into buying it so that you can execute another leg. I'm a little suspicious because my reading for the flows, even though we had negative 21,000, right? I don't have any reason to believe that there's going to be more flows, but if there was another strong flow, I would guess that it would be short, right? So that means that we've got to be deeply suspicious of, all of these technical patterns that suggest that the trend is over and that we're going to reverse, right? That's exactly what all of the retail traders are going to be doing, is they're going to be saying higher high, liquidity grab, yada, 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 let's buy it, and then they just get crushed. There's another leg out there, then they're just going to get crushed. Yeah, and then another thing I should mention is that, like, the 30-year has been moving way more than the others. So, like, since we hit the low and kind of pulled back, it's been rotating around that 05. Like or it hasn't really been enough movement in the micros for me to justify a trade. What the heck is this? Meta Platforms Incorporated introduces AudioCraft, a generative AI tool for audio and music. Okay. It's still a little illiquid there, right? It's like they come down and they just like immediately pull. Okay, so here's something I missed. Joseph Wang, some details on the Treasury's new buyback program starting next year. It's going to be small, a maximum of $240 billion a year, 120 in liquidity purchases, and 120 in cash management. Yeah, that's not enough. The Virus IQ tweets, the Bank of England is watching measures of inflation expectations closely as it worries about long-term price growth pressures in the British economy. The reduction in short-run expectations is a welcome development, with these data often playing an important role in wage setting. Oh, geez. Yeah, they're coming for your incandescent light bulbs, folks. Do you still use incandescent light bulbs, though? Oh, I see. Seth, why? Because it's still the hole, man. I think that if I have 100,000 contracts to sell still, that this is kind of, when I look at this market, that's not a market that I want to sell into, right? If I start executing and start taking out 2,000 lots at a time, they're just going to puke. They're just going to booge, right? I want these guys to have some confidence. I want those buyers to think that like it's over. They're feeling confident putting their bids out and taking limit orders. You need something to sell into, and it's not there yet. The market hasn't recovered. And this is actually probably an unusual situation. So let's try and do a little bit of analysis here, right? So when I say it's a bit of an unusual situation, if I can explain to you, the reason why I tend to say it tends to be 45 minutes is because of the 3/5 rule. So the 2/5. Yeah, no, it's a 3/5 rule. So it's like you do 3/5, but then 1 minus 3/5 becomes 2/5. But then you do the reciprocal of it. I forget which formula it comes out in. I'd have to go and look it up again. But basically, you get 2.5. Okay. So what that means is that when you have a meta order like this, the decay this function follows the square root. This function right here is a 3/5 root, basically. Okay. So that means that it'll take 2.5 times more for this to recover than it was for the original meta order. Right? So what I could do is I could come in and I could say, starting from, let's see here. So I do Fibonacci time extensions, and I would say starting from the 30 minutes down to here, Okay. Just assuming that we're starting there and not up here. Because you might say that. You might say that it's over here. Okay. But that would mean that we're not in the clear for another 30 minutes. Right? If we do it down here, maybe another 20 minutes. Okay. But that's what it would take for the liquidity to like really truly recover, probably. Now, the issue here is that those guys were pretty desperate to sell. And so there might be some people that there's enough of them out there to sell. They can't wait and they're just going to take it, right? But it's moved in this location long enough and all of that I think that we're probably okay on that one. So we would just want to wait for the liquidity to recover. And until it's recovered, yeah, you're going to kind of get all of this funny business inside where like every little order seems to move the market. And it's really volatile in here, right? Because when there's not that much liquidity, that means that those individual orders have more impact, right? But there's still the liquidity hole, so it gets really hard to break out. How come they got downgraded? Well, there's a bunch of places you can go and read about that. They basically said that like the fiscal position has deteriorated in governance and yada yada. So yeah, overall, that means Seth is not really interested in taking a trade for another 15 minutes, right? Are you mad about it? About the no? That he's talking about the credit up downgrade. Like I tell you, this isn't the first time that the U.S. had its credit rating downgraded, and it was a nothing burger. Like, so here's the thing. This time around, it really came out of the blue, right? They waited until the markets were closed to do it. They put the thing out. Nobody had any clue that anything like this was going to happen, okay? Last time around, like, everybody was fretting about it for, like, weeks and weeks. Like, oh, a credit downgrade might come. This would be so bad for the U.S. economy. It was, like, such a big deal, right? And then it happened, and the market just, like, shrugged. I was like, okay, whatever. You know, there was, like, the initial move, and then everything continued on and ignored it. And I anticipate that that's exactly what it's going to do this time. They can just wipe it out and start fresh. Yes, let's do it. And then I don't owe my mortgage anymore, right? Interesting. From the Financial Times, Taylor Wimpey says rising rates are not canceling out homebuyer demand. Ew. Ken, why? So, one of the things that I have like auto filtering on Discord is if a new member, so like if you're a regular, it doesn't matter, but like if a new member says something like direct message or private message me or any of the abbreviations or whatever, it filters it. And there was these two guys talking yesterday where it was like one guy was asking a question, the other guy was trying to answer the question. And the first guy was like, here, I'll send you a link in a PM. And then it got filtered by the robot. And then the other guy says, can you send me the link via DM? And that one got filtered too. and then afterwards I came in and made them both regulars and then it was fine. But it's so funny. So do you see this? How easily they come back down to the bottom here? Right, this is exactly what I'm talking about. The liquidity is not healed because the original meta order that we had was so long. Now, the concern is if the volume is still out there, I mean, because that was a new low in cumulative delta for the 10-year, they may just go for it. They might not wait. They won't get as good of a price if they're able to wait. But if there's other people out there that are impatient too, then there's nothing they can do. You just have to go. Because you know what? Seth can sit here and say, Seth does not have a position and he doesn't know if there's going to be more orders. So he can just sit here and do nothing, right? But the guy that has 100,000 contracts to sell today, he can't do that, right? It starts going, it's like, crap, okay, it's already leaving without me. You're behind and now you're selling even harder, right? I came here today looking to ask about the 45-minute rule. It looks like you just explained it. Yeah. Thank you. That's just because that's how long a usual meta order takes, and then that's the 3/5 rule for decay. It comes out to be 45 minutes most of the time. But they kind of randomize it, right? Like if it was like exactly 45 minutes after the meta order stopped, it would come back in again, then everybody would realize it, right? So they kind of like fudge it by 15 minutes or so on both sides to make it random. In fact, I've actually heard some people, some institutional guys say that they like go through and look at like every time frame and like all of the common patterns that people might see on different time frames in order to time their trades to be when nobody would expect based on any of their technical analysis. Isn't that funny? So yeah, there's kind of a little bit, you kind of got to draw a little zone around that time, but okay, so I hear you talk about single meta orders. Of course, there's multiple meta orders being executed all the time in different directions. So how does that change things? Okay, so good question. So, oh my gosh, are they going to go for it here? No, let's just wait. I'm not going to get involved on this one. Not live, at least. I'm saying that, but there might be a scenario where I do feel compelled to do it. Okay, so let's just say that all of a sudden, both you and I decide that we have a reason to execute a meta order, and I need to buy it and you need to sell it, right? Well, then what is likely to happen is we'll just meet in the middle, right? And that's often when you see like, there's a big iceberg on the bid and there's a big iceberg on the offer, because it's like the two big guys are realizing like, oh, there's a big guy for me to trade against. So I don't have to do the same thing. I can just hit into his iceberg until it's cleared. Right. And then, once the iceberg is cleared, then I can kind of see where we're at, right? So yeah, two opposing meta orders will kind of cancel each other out, right? And this is why you kind of got to do this full analysis of, okay, what are the forces out in the market that might be causing selling and the forces out in the market that might be causing buying? And like how many orders do I think that those particular forces are, so that you can kind of game out if there's a clear imbalance. Because, if I've kind of got people going both ways, then it might just go nowhere, right? I need to find a situation where there's like a very clear difference that more people want to sell and it's going to push price. Yeah, so when I talk about a single meta order, that's the way to simplify things. And another thing is that you got to realize, like, the traditional definition of a meta order would be like Goldman Sachs coming in and executing a block trade for somebody that's 100,000 contracts, right? And so they split it up and they sell it over the whole day, right? But something else that you could consider a meta order is all of the traders coming in and selling this instrument based on X news, right? So all of these people kind of trading together can kind of be considered a meta order as well. Or people trading on the same thesis, essentially. But, it's important because the whole thing is that, like, for as aggressive as they were selling earlier today, it would be a little unusual for them to be done. Now, it might be a little bit too early for them to sell again, but I'm going to bet that you come back in an hour and it's still going to be mostly sells. Yeah, and the way that they impact the market at the same time is similar to that of a meta order. Yeah, exactly. At least the square root law impact thing still applies, right? The way that they execute it in terms of like multiple legs and allowing the liquidity to recover and that sort of a thing, that is more an execution strategy that is really common among the block traders. But that's kind of why I keep trying to emphasize that, like, when things get really crazy, like the kind of Almgren Chris thing doesn't really matter, because these guys are like, I can't wait, I just have to take it. So I kind of think like all of those little things are kind of like, okay, here's like the empirical evidence, here's the way that the market behaves, and those are kind of little things that we can do from a technical level, right? Like, yeah, I favor the trend, but I need to be in early on the trend. I don't want to catch the end of the trend. That's when you get screwed, right? But I think that the bigger picture thing that you want to understand from all of this is that it's the orders that move the market, and it's the orders that you're trying to predict. Because if you're just looking at price or any of these other kind of things that people try and use to model the markets, it's not going to explain the behavior very well. But once you understand it's the orders and you can kind of come in and do that analysis, then you can kind of sort out where it's like, well, okay, yeah, this piece of news was important, but these guys needed to sell because of end of month or whatever the deal was. So it doesn't matter. It's still going to move, right? What, Lucas? The CME is having an interest rates trading challenge. I didn't hear about that. Did they just send that out? Yeah, the E-mini's still selling. That is... So another thing I should mention here. Well, I don't read those emails. Come on. So another thing I should point out on the U.S. credit downgrading sort of a thing is that it is into a market where like a lot of people were still positioning themselves bearishly, right? Like a lot of the bullishness was short covering. The sentiment is still bad. So if they get an opportunity to sell, a lot of people might go ham with it. Oh, okay, here I do have it. Battle of the Bonds Interest Rates Trading Challenge. Compete in our Interest Rates Trading Challenge from September 10th through the 15th. Let's see what it does. If I have to use their when I click on their link, it says enroll today. I get we're sorry, but something went wrong. Look, they're going. There they go. There's new low. Okay. You can see the liquidity is there because now you're outside of the hole, right? Yeah, that's weird. Maybe it's my browser or something? No, shields are down for CME Group. It's probably just an intermittent error. So I don't know. On one hand, I don't particularly care for the prize money or any of that sort of a thing. I would much rather a new person get it and get a start to trading and all that sort of a thing. And there's often problems with like trading contests, right? Because it kind of favors certain ways of trading which may be a little degenerate, right? But on the other hand, it does sound like a really good opportunity to promote treasuries and so forth, right? So I think that I would want to be involved in some way, but if I have to get on their crappy sim and enter orders in the crappy sim way that they've gotten everything, I don't think I want to do that. But maybe something that I could do is just come in on the first day and sell the treasuries and hope that it works out, right? This is probably what I will do. Yeah, it is a lot of excuses. I really don't like trading contests, right? I must be the only well I would say that in the S&P 500 that I am bullish at this moment, but that on the kind of the time frame that I'm talking about, that doesn't mean that there's not going to be more selling today. It kind of means more like at some point today I would like to buy it, but I don't know what a really good price would necessarily be. But I do think if it's selling because of the credit rating downgrade, that you buy that dip, right? What's the so last time they did it, people showed me what it was, and it was just kind of was a little underwhelming to me. It wasn't like scalping. But I can't even click the thing to really see like what the rules are and everything, so maybe let me try a different browser really quick. Or actually, maybe I can come over here. Well, but that would normally work on a normal person, right? But to try and appeal to their ego and be like, well, yeah, but you got to prove yourself that you're the best and all that sort of thing, right? But that's the thing, is that like, I don't care if I'm the best. I don't think that in a trading contest that I would necessarily win. I think that if I did win, that I would probably be doing some things that I wouldn't recommend people do regularly, right? So it's kind of right. The reason that I would have to do the trading contest would be because I could promote treasuries and people that want to trade treasuries, right? let's see here. So I do see if I can come over here. Trading challenge. I know if the CME came to me and they were like, Seth, you have to trade this because we know you're like the top influencer on YouTube that trades treasuries live and whatever, then you know, I have no choice. I'm not going to tell the CME no, but yeah, not sustainably. Yeah, there you go. Trying to get to it from the CME website. I get into oh, here it is right here. Battle of the Bonds Interest Rates Trading Challenge. Register now. Aha, that link works to me. Okay. During the challenge, you'll receive daily exclusive educational videos where you'll learn about the key benefits of trading interest rate contracts. Our trading challenge is designed to give you the opportunity to test drive trading strategies and gain valuable exposure to the bond markets. Battle against your peers in a risk-free environment with a robust lineup featuring some of our most traded Treasury contracts like the 2-year note, 10-year note, and U.S. Treasury bond. Oh, okay, so that's the first thing right there, right? What does that mean? If you want to win, you're going to have to trade the 30-year, right? That's what that means. Especially with the steepening that we've seen today. Like, man, no way you're going to be able to keep up unless you're trading the 30. Go head-to-head against other traders for the grand prize and earn bragging rights in the Battle of the Bonds Trading Challenge. Competition is open to residents in the U.S., Canada, excluding Quebec. Oh, you can't do it in Quebec? That's funny. Brazil, United Kingdom, Germany, Netherlands, Switzerland, UAE, Dubai, Abu Dhabi, Republic of Korea, Taiwan, and Japan. You register. Okay, that's even worse. Throughout the competition, all trades will be completed in the challenge simulator. All traders will begin with a virtual account of $100,000 with the goal of increasing the balance as much as possible by the conclusion of the competition. Yeah, I didn't see Italy listed on that list of countries, unfortunately. The top 3 eligible traders with the highest account balance and completed the eligibility checklist at the end of 5 days will earn cash prizes and bragging. Wait, what is the eligibility checklist? Is the eligibility checklist like I have to take so many trades and things like that? Yeah, no, Quebec is excluded. Not Ontario, but Canada excluding Quebec. That's really weird to me. And it starts September 10th. That is, we've got a whole month before we even have to worry about that, right? So we can debate it for a whole month. But, I don't know, guys. What's going on at that time? I would just rather trade my own accounts. Like if we say 2.5, right? I'm doing math that I should probably be able to do in my head. 2,500. I could reasonably trade 40 contracts. I should just come in and sell 40 contracts at the beginning of it. I don't know. That's a strategy that I think would be the most likely to win. Especially if I can hold it overnight. Anyways, it's the 10th through the 15th. Okay, so that does start on a Monday. Oh dear. My computer just flipped the cash. Ooh, I don't like that. Okay, so it starts on a Sunday. Okay, so there's a 10-year bond auction, CPI, PPI, Empire State Manufacturing Index, consumer sentiment and inflation expectations all that week. Oh. I mean, I know that I wouldn't be making $2,500 from my trading, but I don't want. I want to trade that with my live account. That looks like a good week. Is that really? And how did you do, Kevin? So see, because Kevin did one of these, right? He can tell us, right? Because my recollection was that the simulator that they use sucks. You were top 10 out of 2,500? Oh, that's not bad. I would have thought you would have won. You YOLO'd the inventories. Right. That's exactly right. That's the only way, in my opinion, if you want top 3 for the money. Yeah, it seems to me like it would be really hard to compete without doing a swing. I mean, I could come in with 40 contracts, you know, I could market make a lot, right? But I don't know if the sim would really be very. So like, let's come in here. I'm gonna put in here 40. Okay, make sure that I'm on my experimentation account. Okay, and we'll just do something really stupid. 40 contracts long. Right. I mean, you could do okay scalping it, but I don't think that it would make up for the guys that just take one swing at the beginning. Especially since in the Treasury markets, I think that we could be in a place. Also, let's come back out over here and look at the. So, I mean, that's really far in the future, of course. But, so we're basically looking at this time frame right here. So let me draw a line here and then flip it over. Vertical line 9/8, I guess. Oops, that's not where I wanted it. Triangles, vertical line, September 10th. Well, 11th. Okay. Jeez. It might be too late. Because I'm concerned that we do this sort of a thing. Right. So during this period, you might get like some real shorts. So I'm kind of saying that it might. So like, here's the thing, is if the market is like this, then the guy that just goes short here is probably going to win. If the market goes like this, then it's the people that scalp the range that are going to win, right? Oh, I'm not even showing you guys the right screen. Right? Well, I think that at the very least I should register, right? But I don't think I'm going to take it very seriously, is kind of what I'm saying, right? The winner took some intraday ones. 7 per day, really. But I mean, that's a month from now, so we'll kind of see what we think a month from now, right? Oh wow, they've been sitting there at 22 really pat. The CME is doing treasuries for the competition this time around. And the top 3 winners get what was it? Okay, first place 2,500, second place 1,500, third place 850. Yeah. So I'll enroll, but I don't promise to take it seriously, okay? No. It doesn't happen until September 5th. So you got a whole month. And it happens on a very interest rate heavy week too, by the way. How long is just 1 week? Yes, it's 39 days. Okay. Oh, okay, so there's some rules. Now that I have registered, I can see rules. Each participant will start with a $100,000 account. Participants can only hold a maximum of 10 contracts per product at any one time. For instance, a trader might have 30 total contracts, but only 10 SOFRs, 10... oh my gosh, they're making it even more complicated. Oh, that's so interesting. So that means that to do like the maximum thing that, you know, like to take a directional position and like hold it through the whole competition sort of a thing, you would have to sell 10 30s, 10 10s, and 10 5s, right? To max out your margin for the $100,000 account, because they only let you have 10 of any one individual one. So they're kind of setting the rule up to encourage you to trade spreads. Although I don't think that actually does encourage you to trade spreads, because, you know, if you can only do 10, because like part of the advantage of trading spreads is the lower margin. I don't see here. It hasn't given me the list of exact contracts yet, so I'm still reading. Okay, any positions as of Friday, September 15th will be settled to the price at the time of the challenge close, and any profits or losses counted towards your account balance. Use the challenge simulator located in the challenge section of the Institute website. Any trades made in the practice simulator will not be counted towards your challenge account. Winners will be those who compete all eligibility requirements, which are courses, reside in an eligible region, and who have the highest account balance as of the challenge close. I'm not interested in a challenge at all. That's the thing. I mean, your reputation as a trader and streamer is on the line. People will heavily judge you based on how you perform. Well, I guess I don't care about that, right? I think that people should judge me based on the empirical evidence that I'm presenting. Okay. I don't think that how well Seth does or doesn't do doesn't necessarily mean anything to you for you, right? But when I can give you information and I can prove it with empirical evidence, that's what's going to help you, right? But I will participate because I want people to do it, and I guess all of you guys should be doing it too. But I wouldn't expect to win it. I might not necessarily take it seriously. I might do some stupid and degenerate things, right? Because to win a competition like that, there has a little bit of luck involved, right? Yeah. What does it mean? Should I check public? Here. Oh no, that doesn't help. Let me. Yeah, let me give you the let me see if I can get the link here correctly. You just go to here and you should see the link for it. I should end that poll. Okay. Competition dates, eligibility, price details. Eligibility checklist. Join the Futures Challenge. Complete the Introduction to Treasuries course. Complete the Introduction to SOFR. And complete the course Understanding Stir Futures. But what are the eligible products? Practice on the simulator. Why until, yeah, it's from September 5th to September 10th. So 1 week. Oh my gosh. This makes me, okay, so I've loaded up and the first thing that I get is a trading view. I mean, it kind of looks to me like you can trade anything. So we could come in with 10 ultras and do stuff, right? Practice accounts. Need to reset your account? Check here. Okay, so if I come in here and I say Ultra T-Bond Trade Futures Order Type Limits now Market 10 Side Sell 10 Submit Order Margin 6,600 Sell 10 day. Okay. So now that I've taken a position, here I can see open positions. It gives me down 1 tick, of course. Bill, everything. Yeah. So it's not the best simulator, right? I could not scalp and take the edge in all of these sorts of things, right? So I would think that we would have to position trade it. Do people actually trade? Yeah, right? Like that's the way that most people trade. Isn't it scary? No, we'll swing it. We'll swing it. We'll come in. We'll have some predictions about what we think the flows are going to be. We'll avoid taking any positions during the news per se. But yeah, we won't scalp it. We'll position trade it. And then I'll just super downplay the expectations. Like nobody should expect me to win. And if I do win, I would rather somebody else get the prize. Because I don't need the money to fund an account or anything. Is it live? Like, oh, where did it go? I minimized it. I guess I need to pull up a UB DOM here. Because it looks to me like we've moved down since. You, right? Yeah, there we go. I can't tell what the profit and loss is. UB, we're at 20. I should be up 3 ticks. What is it? It's let's see what it's, because it doesn't show me what the last was on this, right? On this little thing, it doesn't tell me what the last price was. It says my average is 23. So if I made 31.25, right? Times 10 contracts times 3. Oh, 937. Okay, it is correct. Cool. Well, the issue is that okay. There's all sorts of bad actors out there that are going to be like, oh, let's turn it into a big contest. And I'm not interested in that. Right? But I will take some swings. I don't know. We'll take a swing here on I'm putting the bet in here that over the next month that the treasuries will continue selling. That's a pretty big bet. We'll see where we're at when September comes. That's the practice sim, so. Close that. Oh, it's already 8:30. Whoa, 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 whoa. Okay, so that move was a lot stronger in, well, no, I think it was the 5-year dragging us down. I'm not seeing a change in the dollar, nor in the Japanese yen. It was specific to the treasuries there. Yeah. On this one over here, it's like, oh look, I made $2,000. Look, it's a $100,000 account. I've already made 2% in a day. That's, hey, you take your profits and run normally, right? But if you're trying to win the competition, like you gotta hold that, right? Oh, you're not in the registered countries? Oh wait, where is Lucas? Oh yeah, because Lucas is in South America, right? I can't remember. No, I have a spreadsheet. I think I have it on my spreadsheet. Where's my creeper spreadsheet? Jeez, Oh, I don't have it on there. He is in South America. So is it Brazil? No, it's not Brazil. I don't remember. More to the south of Brazil? Isn't like the only thing south of Brazil like what? Chile? Pulling up a map. I'm cheating. I'm pulling up a map. Oh no, there's tons of stuff south of Brazil. Paraguay, Argentina, Chile. Bolivia, Peru, Ecuador. Well, you know what, guys? Oh, you're Argentina. By the way, I have listed on here that you got funded back in March. So now that it's been like 5 months, how are you still funded? You're not quite past the 6-month mark, but if you make it past the 6-month mark, then that means that you are like the winner, because most people lose it before that. No, it's not only for Americans, but there's a list of countries, and Morocco is not in that list. Unfortunately, sorry. You could still do it, but but if you win, you won't get the prize money. Funded, but made nothing so far. So maintaining the account, but it's been tough. Still underwater. Gotcha. But to most people, as my understanding is, most people blow the account before 6 months. So over here on this one, what was I going to say? Oh, yeah. Remember I said, let's go back and do the analysis, okay? So if we come in and we use our Fibonacci time expansions, and we say starting at 6:30 that we went short, okay, till here. Oh, actually, I think we do need to go all the way back to here. To the beginning of the news. Okay. And then you give yourself a good 10-15 minute window around that. Look, the selling comes in and pushes new lows right around when you would expect. In other words, there probably is somebody using an Almgren Chris type of algorithm selling a meta order into the markets. Now, will you get a lot more than we're getting right now? Oh, I don't know. Overall net, though, it's 40,000 contracts, right? Started at zero, basically. It's a net 40,000 contracts. I think there could be more selling. I think that we could have minus 60 day. I'm making like $50 per session, but this is after having the account decimated on stupid mistakes. Oh, I'd expected to hit more than $50 a session if you had gotten funded, but I don't know. Now, that said, if there's another meta order sell coming in here, I should be taking a trade, right? I kind of feel like it's already too late again, and I don't really want to take a trade like 15 minutes before I've got to go. So I'm not going to take a trade, Paul, even though I kind of think that there's a possibility it keeps going. I did take a trade, right? I put it on my simulator account. What? No, it says it's at 20. Oh, that's weird. Wait, is this simulator delayed? It is delayed. Oh my gosh. Oh, that's so bad. So that's funny. I took the right trade, and you know, without having to know that it was UB. I make here UB. Yeah. That's funny. So at one point I actually got 15, which would have put me up like 3,000. Hopefully their real practice simulator is live data, right? Yeah, I'm a little, I don't like how it just like badoosh and now it's kind of coming back, right? I don't know. I tell you, I'll make an account. I'll place some trades on it and everything, but I don't see myself getting too deep into that window. Oh, I closed it. I don't see myself getting too deep with what I've seen. Fun idea, but I will still promote it. I want people to trade treasuries. Oh, there they go. So there's another basis point. Good futures firm that works worldwide? Oh, I don't know. Just pretend that you're in the United States. I didn't say that. I didn't say that. There they go, new low. I should have just done it. I mean, you know what? I really think that only being 15 minutes left in my session is a good reason not to take a trade. Okay, but like it looks like it's going to go to a spot where I could take a profit that I would be happy with before we're done, right? Now, I don't know about well, could you have, I guess you could have taken it as high as 28, right? That would have been a good trade. The 30 years just getting demolished again, though. I know. Days like this, because I've had a lot of days like this where I was just on the sidelines when it really moved, right? And days where I was like, I'm pretty sure that it's going to keep going, but I'm just not like willing to risk my account. So I think I'm too risk adverse. But oh man, it's been happening a lot lately. These crazy moves. I don't see how the S&P 500 can maintain the rally if the treasuries continue to sell off like they have been. Yeah. Yeah, that sure, when I come back and I look at the chart, that sure was ugly. I guess, we kind of ignored it a little bit, but that decline to new lows that happened around the top of the hour, because the yield is rising, does that mean inflation will get worse? No. So when inflation is bad, you raise interest rates. The data that we've gotten recently has kind of suggested that inflation has been tamed, although we are seeing some leading indicators suggesting that more inflation is coming. So there's kind of two options. One theory is that investors are predicting that inflation will rise, and that's why they are raising rates here ahead of that. Okay, that could be one theory. Okay, but the other theory is that the interest rates are rising for other reasons. For instance, because the Treasury is going to be issuing so much, that's going to hurt prices. Because of activity from the Bank of Japan, that's going to raise rates. These sorts of things. Sorry, did I say raise prices before? Raise rates, right? Like everything right now seems to be conspiring to be short treasuries, right? So kind of the issue is this. What if right now it really is option A, and then the inflation comes in later, right? Then when the inflation comes in, it's just going to be like even more crazy. I think. So this is where I'm kind of like, I really don't think that the stock market can sustain what it's doing over here with the yields selling the way that they have been, right? Eventually that's gonna, they're gonna flip over and get the yield from the treasuries. I mean, good grief. If you can make, 8% per year just parking your money, right? Like that's a lot of people are going to take that. So I don't know. The thing is that like before that contest happens, it kind of seems to me that the market's going to do a lot of interesting things. We'll see where we're at in a month. I suspect that it's going to continue selling, but I don't really know. Still got a little bit of time left. How much lower do you think they can go? There's another $20, man. So on my little practice account here, what does that give me? Oh, it's I would have to wait longer. Still hasn't come into where it's lower. Yeah. I don't know. It says, oh no, that's the E-mini. We need to come over here to interest rates. Ultra. There we go. Wait, why is... Oh, because it did the Ultra 10. That's the wrong one. Ultra T-bond. There we go. 16. There we go. Now it's showing me 2,187 PL. Yeah. Deep diving to the depths of the Titanic soon. I tell you what, man. This could be a doozy, man. Like, just come back and look at a daily chart, right? Okay. I think that there's plenty of room on the downside, right? Oh my gosh. Wow, did you guys see that? They just traded 9,000 contracts like that. Holy crap. Wow. 10,000. I mean, there's an iceberg there, so that's cool, but oh my goodness. That is some insane selling. I mean, that might stop it for a little while. We'll see. But that is some insane selling. I really question. I don't think that bodes well for the near-term future of the markets. You know, this whole thing I was saying, just based on the whole credit rating downgrade and all of that sort of stuff, I would be like, buy the dip in the S&P 500. But when you factor everything else in, I don't know. Maybe we're at a major inflection point in the equities, because the way these treasuries are trading is just like not good for the equity market at all. That's pretty insane. I think that if I had taken my position, you know, given that I only got 3 minutes left, I definitely would be taking it off now. So I would be getting like $16, right? Not this. Well, I kind of felt like that yesterday as well, right? Like when it did come in and sell, it seemed really excessive. But this is starting to turn into a feeding frenzy, right? I'm surprised. So now 18,000 contracts have traded at 17.5, but I'm really surprised that something like that is sitting out there, and that they're willing to sell into it so quickly. Like that one was literally like somebody had an iceberg sitting there at 17.5, probably did not expect it to get executed and have just kind of been moving it down, and somebody like market sold. In fact, can I see if I minimize these, take my head off of here? No, it doesn't show that. The biggest that I see is 1989. So I was wondering if maybe there was a really large market order that was all of that. No, it all kind of came in a spurt. But geez. And it's offer, and there's an iceberg sell on it that's trading 3,000 contracts. This is that looks like a level break opportunity to me right there. And there's one tick. Pullbacks on ES and NQ are so shallow. I mean, to your larger question, I would say that this is not normal for August. I think that it all makes sense. I think I understand roughly why the market is acting the way that it is today. It's quite a bit more than I anticipated, but it almost always is more than you anticipate, right? Usually the summer and especially August is really quiet, and we just happen to have like a really good setup with news and everything and economic numbers this week to get some real, oh my gosh. This is nuts. Okay, the 30-year didn't move as much that time as the 10-year did, but there is some like, there's got to be some margin calls in that or something. Like that is some crazy sell. Well, it's time for me to go. So let's put into today's, let's change the title today. Treasury selling turns dire. Okie dokie, guys. Good day. I wish I had taken a trade. Obviously, could have made 50, 70 bucks, but I did what I thought I needed to do, and I'm okay with it. Geez, it kind of, I hate, yeah, dire, right? I hate to leave right now because this is going nutso, man. The drive is, you know, I mean, I did make the call. I just want to point out here again, because this is like real market behaviors, and okay, and it is incredibly reliable. Okay, when you have a large meta order that sells, it takes about 2.5 times the duration of the original meta order for the market to recover. And so that's what you kind of see, right? Is that 2.5 times that, then the seller comes back in. And it's just so crazy how hard they're selling it here. It really is a little shocking. I mean, I've definitely seen moves where like the amount of volume was trading was higher and it was crazier, but like this is a summer market and everything, and relative to what we have in the liquidity and everything else, this is really excessive selling is what I see. And I think it's a bad sign for markets at large. So I'll leave you with that. See you guys tomorrow. In the meantime, stay excellent, team.